I think it's always been one of the promises of our industry, and people ask, why hold Bitcoin? What is it good for? Why hold Ethereum? What are these blockchains? What are these assets good for? The narrative and the response that you would hear has changed a bunch over time, and different people have different takes on this. And so I think we've moved from the promise of blockchains being helpful in all of that to actually starting to see the real use cases develop.
Today's guest is Mike Giampapa, a general partner at Galaxy Ventures. This is our last episode for 2024. Happy New Year's Eve if you're listening in today. I figured what better person to have on than an investor who has been in the space for a while and kind of talk about what happened last year, what's going to happen next year, everything else in between. Mike, welcome to the show.
Pleasure to be here. Thanks for having me.
Pleasure to have you. We had Will Newell on, who is another GP at Galaxy, and he did great. So
I say he's my better half.
Yeah. Well, maybe you are the better half. We'll see. We'll see after this episode, right?
Awesome.
How'd you get into the space?
I came into the investing space from a more of a traditional lens. I started my career at another venture fund called IVP, Institutional Venture Partners. And I started getting into crypto, bought my first Bitcoin, was involved in IVP's investment in Coinbase in early 2017. And that really sparked a whole new path for me in my career. I saw the growth that was happening at Coinbase at the time and just became pretty obsessed with the crypto ecosystem. Went off to business school for a few years, 2018, 2019. Those were dark days for the crypto ecosystem. There was not really that much happening, but I spent a lot of my free time just going deeper, building a network. Did an internship at Circle during that time. It was right before Circle had launched USDC, and so I was, got the experience of working at a hypergrowth startup at the time, kind of on the precipice of launching one of the most significant products in the space in USDC. So it really kept me engaged and got to see the ecosystem really evolve through different cycles. And then after business school, I spent a few years at Bessemer Venture Partners here in New York, and really focused on building domain expertise across financial services. And my personal thesis has always been, right, how are blockchains, how are crypto assets going to augment financial services or improve them, help financial services companies offer, new, better, more efficient products. And that thesis has kind of slowly been playing out, which is awesome to see. I think, now we sit here today with stablecoin adoption and interesting kind of acquisitions happening in the space, I'm sure we'll talk a lot about. And I think that thesis has gradually played out. So joined Will and the Galaxy team about 2 years ago now, and excited for 2025. I think it's going to be a really interesting year.
Yeah, no, I agree. On the front about stable coins, the fact that you worked at Circle in its earliest days must have been crazy in a good way.
It was, so I was there in 2018. Circle has had a long history, kind of different, kind of different stages of the company. As I said, I was there right, kind of the summer right before they launched USDC. I can't say that I knew that the company was going to launch USDC and kind of go down a totally different path and on a different trajectory. I actually joined when the company had just completed its acquisition of Poloniex, and given my experience at Coinbase with investing in an exchange, I was very excited to work on that project. And that acquisition never ended up really panning out. They went on to launch USDC and really changed the course of the company. Got to meet a lot of great people at Circle. Have since backed one of the early members and kind of designers of of USDC, Joao at M0, and so it always comes full circle.
No pun intended.
But definitely definitely an interesting experience working there and kind of seeing the business evolve.
Yeah, for sure. What made you want to go to the investing side? Did something happen in business school where you were like, I gotta move?
I knew I wanted to stay in investing. When I got to IVP, I knew that's what I wanted to do. I love working with founders. I love the analytical kind of introverted part of it, where you're diligencing an industry and a problem and trying to figure out the future. It's not a straight line. It can be abstract, but it's also it's also something that you work with people, you engage with founders, you help them kind of realize their dreams and try to shorten their learning curve a little bit along the way. And I always just love the combination of technology, investing, and the people aspect of venture.
Yeah, for sure. A little birdie told me that you are most interested in the intersection of crypto and financial services, payments, RWAs, stablecoins, which makes sense based off the initial part of our conversation.
Yeah.
How do you think that's kind of evolved from maybe when you first started investing in crypto to even 2 years ago when you started at Galaxy?
I think it's always been one of the promises of our industry. And people ask, why hold Bitcoin? What is it good for? Why hold Ethereum? What are these blockchains? What are these assets good for? The narrative and the response that you would hear has changed a bunch over time, and different people have different takes on this. But people hold Bitcoin as a store of value. Are blockchains great? More efficient financial rails? Is it a panacea for the gaming industry or the metaverse or things like this, right? Is it now a new substrate for AI, right? Like the narrative has gotten bloated, maybe I'd say, co-opted over time into different paths. I've always just come back with, back to the financial services infrastructure in this country was built 60 plus years ago. And it's gotten us, from the analog world into the digital world. Yeah,
it's got us here, but
it's got us here.
Better.
It works,
right? Yeah.
But it can be a lot better.
Of course.
And I think, financial products, I think people in the US are spoiled based on the currency that we hold, based on the financial institutions that we trust. And so I think if you take more of a global lens, to the same topics, like there's less trust, there's more inefficiencies, there's higher costs, and I think that just creates more of an opportunity. And so I think we've moved from the promise of blockchains being helpful in all of that to actually starting to see the real use cases develop and real adoption develop. And I think we've moved from a world where people are speculating on crypto assets, which is not good or bad, just it is what it is, to a world where there's a lot of non-speculative use cases and the actual technology is being used in a way that people have been predicting, but we're actually seeing it come to fruition.
Mm-hmm. What are some of the non-speculative use cases that you're talking about? Maybe you've invested in these companies, or you're seeing some promise there.
Well, it comes back to USDC and stablecoins in a lot of ways. And I think if you just look at the stats that you're seeing in that market, we're now, over 200 billion of assets supply across the whole stablecoin market. We're almost at 1% of M2 money supply in the US, which is like, to me, is an interesting benchmark. It's kind of like the 100K Bitcoin price benchmark. Getting to 1% of the money supply in the US is a goalpost to say, one, it's sizable, like it's not a rounding error anymore. 1% is meaningful, but it's still very, very small.
Mhm.
And so when you look at that, just the stablecoin market, probably, 50xing over the last 5 years, we think that there's a lot of room to run 10x plus in the near term. And if you look at it on a transaction basis, not just like a float basis, based on kind of conservative metrics, you're talking about $5 trillion of volume on an annualized basis in 2024. So if you look at payment volumes globally, like we are talking again, a fraction of the addressable market. So we've gotten to a meaningful point, but there's still a lot more room to run. And I think you're seeing the use cases evolve from people holding stable coins as a store of value, very similar to the Bitcoin value proposition. But if you're in an emerging market and you're not trying to speculate on currencies, you just want to hold value in something that's stable. I think it started there, and now we're seeing it start to expand into being able to send stable coins around the world. So this sort of sending use case, cross-border payments, remittances, et cetera. And then lastly, I think spending, right?
Mm-hmm.
People want to be able to spend their stable coins like it's fiat. And I think you're going to see a real, kind of emergence of this trend where people are demanding the ability to kind of more utility from their stable coins, to be able to get yield, to be able to spend it, to be able to save it, to be able to send it, et cetera.
Mm-hmm. Do you see an opportunity for this to kind of, or maybe not even an opportunity, but when it comes to traditional players, obviously like crypto people are 100% on board with this. We've got startup founders building it. We've got people that are ex-TradFi building in this space. But when it comes to actually engaging with those who are still on that side of the post, do they really want this? I know sometimes they'll come out and say like, oh yeah, we're working on this. Or like JP Morgan has like the Onyx blockchain. But then sometimes Jamie Dimon says he hates it. And it's like, okay, pick a side. But
it's confusing.
Yeah. But then it's like, we could create all this technology. It could be extremely valuable, but if the biggest like 99% that you're talking about of institutions don't actually adopt it, where does that leave us?
Fundamentally, the technology has to lead us to a better place. I certainly don't expect adoption for the sake of adoption, right? It needs to make economic sense. And so when you look at just cross-border payments and how complicated that process is behind the scenes and how much time it takes and kind of what the average costs are to send money from, the US to India or Singapore, or what have you, there is tremendous room for improvement. And so whether you are Stripe and you make a sort of, eye-popping acquisition of over $1 billion of a company like Bridge, there's a reason why they're making that investment. I think they see it as a TAM expansion opportunity for them and their business, potentially a margin increasing activity if you're able to serve customers, around the world and kind of payment volumes around the world at a fraction of the cost using crypto rails. And so I think you're going to see a lot of fintechs start to push into this through partnering, through acquisition. I think they will probably be the first kind of, they're on a little bit further out on the risk curve. So I think we're already starting to see Robinhood make acquisitions and Stripe make acquisitions. And I think we'll see others. I don't expect the banks in the US to be on the forefront of this, but I think, those folks are paying attention. They, whether kind of explicitly or covertly behind the scenes, are talking about this technology in a way that they weren't 2 or 3 years ago. And so I think it's going to be very positive for startups in the crypto industry, both via partnership and via acquisition.
Mm-hmm. So is it more like the fintech play to really be the top dog in this? Like you just mentioned Robinhood and Stripe, but you see that kind of as like the category that's really going to be adopting this first?
I do. I think you're going to see if you think about a lot of these kind of traditional fintechs, they've been very constrained to particular geographies. They all start in one geography, Revolut, in the UK and expanding from there, or Nubank in Brazil expanding from there. But expansion is very hard. It's, there's a lot of banking regulations and getting connected to traditional payment rails, compliance, and
yes.
operational overhead. The lift is substantial. There are some perks of crypto products, right? Wallets are sort of global from day one, right? I think you're starting to see card programs get launched from upstarts that are trying to take advantage of this kind of global issuance, global card issuance as an example. I think you'll start to see fintechs experiment with some of those things, right? Launch card programs in different geographies as maybe a means to expand their TAM. So I do think you're going to see fintech adoption, both kind of acquisition and partnering from an infrastructure standpoint, but also using some of this technology to launch new products and experiment in new markets.
And you invest globally across the board?
We do, yeah.
Where do you see the most opportunity right now for, like, let's say payments, on-chain, banking, RWA, stablecoins?
Yeah.
Maybe it's different for each one. I feel like it's not fair maybe of me to ask that question, but I asked it.
We're seeing interesting products get launched and entrepreneurial activity everywhere. It's the short answer. We're investors in a company like Yellow Card, which is really focused on Africa.
Right?
And being the leading stablecoin payments platform and liquidity provider in Africa, with, locking down all of the on and off ramps and banking partnerships and the relationships with local regulators and all the countries across the continent. That is not something that you can do part-time, right? You need, it takes a very dedicated focus and attention on winning that market. I think you're going to probably see things like that in APAC, and I think you'll see, things like that in LATAM. I also think there are going to be players who, are going to be the kind of like long haul providers going from, the US to Europe, and then maybe connecting in through a Yellow Card that has the on and off ramps in a particular geographies. Payments is a very incestuous space, right? Like all these players are competitors, but they're also they also collaborate a lot. And so, and you see this not just in the crypto markets, but in just the TradFi payments markets. These folks are always relying on one another to get to as much coverage as possible. And so I think you'll see that a lot in crypto payments. LATAM is a big area of focus for us. Asia is a big area of focus for us. The Middle East, I think you're looking for some combination of regulatory and banking acceptance. Very pro crypto regulatory jurisdictions that are not trying to crush entrepreneurial activity in this space is a good ingredient to.
It's important.
It's important. I'm very hopeful that we will start to see that in 2025 in the US. But those are some of the geographies that we're focused on. That's sort of a, kind of a non-answer, just saying we're seeing it everywhere, but that's the truth.
Then on that front about the US, were you kind of avoiding investments in the US prior to maybe the shift we're seeing in 2025?
It's a huge market. It's the biggest financial market in the world. It is very important. It's not something that, we were hopeful that the US would get on sides, would come around.
Yeah.
But I do think you're taking substantial risk. At least we were taking substantial risk over the past 2 years investing in this segment in the US when you have, it's been kind of well documented now, Operation Choke Point. You also have things that were not relevant, kind of not relevant to the crypto industry. When you think about like the Synapse bankruptcy and what happened there with Evolve, and that, this is not a crypto related topic, but when it comes to sponsor banks and their banking as a service providers, and then the ultimate customers, and then the end users, that whole chain needs to be improved. It needs to be more transparent. I think there's going to be a lot more rules coming out on the back of the Synapse situation. Mm-hmm. But I think those things don't help. Regulators see that, and when it comes to crypto, international, third-party payments, like these are like all high risk, and you put them all together, and people are very focused on it, which makes a lot of sense. So I think we need to be careful as an industry, but we also want to work with regulators and incumbents to get to a better solution rather than just kind of stifling all the innovation.
Mm-hmm. Yeah, that makes sense. Which region would you say you're most bullish on then when it comes to adoption of this technology? I think the easy answer would be Latin America. Just because of how much opportunity is there in terms of like sending payments, and then maybe Africa too. I think in the US, our banking system isn't perfect. It could be improved, but I could still send you money during this recording.
Absolutely.
Whether or not it'll, be in your bank account today, that's another story. It depends how much, but it's easy for us, right? But not necessarily in other economies.
I would just kind of like twist the question a little bit. The model of having to focus on a particular geography, I think is changing a little bit. I think fintechs using crypto products and blockchain rails as a substrate to move value around the world, I think changes the game. When you think about companies, not investor, but like, some of these companies are now the global Venmo, right? Sling Monies of the world, as an example. I like that approach, right? They're not going and saying, hey, we're going to focus on a particular geography, but rather they're trying to compete against the Venmos in the US and the tosses in South Korea. And all these geographies have a peer-to-peer payments player that's dominant, or several of them. We can now build a product that has kind of network effects globally. And I think that's, we'll see that across peer-to-peer payments, card issuance, et cetera. That's a trend that I'm very, very keen to follow in 2025.
Mm-hmm. On what regards in 2025? What are you expecting to happen there?
I think you're going to see a combination of new upstarts start to utilize this and try to attack the incumbent fintech companies. And I think you're going to see fintech companies see that coming and also try to, launch products that can also take advantage of that same technology. Mm-hmm. So like in every market, you're going to see a kind of a cat and mouse between, disruptors and the incumbents. So, but I think we're at the point now in the adoption curve where these things are starting to really take off. Incumbents are very familiar with stablecoins at this point. It's not a secret anymore. So I think that's those are the types of things I'm looking for.
Mm-hmm. Maybe taking a step back, and in the beginning we talked about like RWAs and stablecoins. I feel like this year has been vastly successful for those two categories. Yeah. You could bundle them together or separate them. Yep. What do you think kind of drove that?
I think it's a combination of the technology is at a place where people can actually utilize, in a scalable way, in an enterprise grade way. Transactions aren't costing $30, in terms of gas. Like right. We've come down the cost curve substantially. And so if you look at other kind of computing paradigms, whether, cloud computing or anytime you're able to come down the cost curve, what you typically see is, a proliferation of applications and kind of usage of it. And so, it's a combination of coming down the cost curve, the technology being robust and scalable enough to actually do things with it, of value. I think there's been a lot of market structure been built out around stablecoins in particular, right? When you think about a few years ago, Tether and USDC, like the liquidity, the distribution of those products, the pairs on exchanges, like we just didn't have all of that put in place just yet. And so like other trends that we've seen in crypto, it kind of starts with trading as the primary and speculation as the primary driver of a lot of the adoption. And then people figure out, oh, we don't just need to, utilize stablecoins as a trading pair. You can do things with them. Again, converting from the promise to actual use cases of. And so I think all those things kind of coming together, really started to change the tune. And at the end of 2023, very early 2024, and so we put fiat dollars on a blockchain. I think the obvious next path was to try to put yielding assets on a blockchain, and so we're much earlier in the adoption of US T-bills on chain. I think we're about 3 billion now in terms of total TVL or AUM relative to the 200 billion in stablecoins. So we're small, but we're growing faster. I mean, I think that number has probably grown 4 or 5x year over year, and it's growing quickly. So we'll see how that plays out. But the long-term trend is more and more assets are going to come onto these blockchains that are going to benefit from the global instant settlement, very efficient, right, rails that we're seeing with stablecoins.
Yeah. Before we recorded, I wrote down some numbers from the RWA.xyz site. I'm sure you're familiar with their data.
Yep.
14 billion in value for RWAs and over 200 billion for stablecoins, as you mentioned earlier.
Yep.
Both are up over 60% on the year. So, I mean, everything you're talking about is very much true that this proliferation and growth is happening. Where do you see that going in the new year? You think those numbers will continue to grow, or we'll kind of see like it goes up and maybe it like stagnates, or hopefully it doesn't go down? But.
I think the stablecoin, I think both numbers are going to grow in 2025. I think the stablecoin number is going to grow, obviously proportionally, right? They're kind of law of large numbers will grow probably slower than the RWA number, but I think that growth will be more durable. When you think about how stablecoins are going to be used and who's going to be using them, and just the adoption of by tens of millions of people around the world using stablecoins, I think 2025 is a year where they become really ingrained in the fabric of financial services globally. We're probably still a little bit of ways away from that in the RWA space. There's still a lot of great experimentation, and it's still very constrained to the crypto ecosystem, where I think stablecoins have and will continue to cross the chasm. And so very interested in both of those trends. I also think about stablecoins moving from more of a, an asset-based model to more of a volume-based model, right? We talk about the payments use cases and the spending use cases. I'll be very interested to see how the kind of $5 trillion a year number in annual volumes, where that goes next year. It's certainly going to go up. I'm not sure by what order of magnitude, but I think there's a very bullish backdrop here between the technology being scalable enough, like I talked about, it actually being a 10x better product. And now you have, a pro crypto regulatory posture in the US, which I think will, create a ripple effect. I actually, we're pretty close with, people across the world on this topic. And we've heard from multiple sources that people in China and people in India and people abroad, are taking notice of what's happening in the US, unsurprisingly.
100%. Do you have a bearish take? all of this seems optimistic, but do you have oh God, this is like my backup plan, the plan B?
Look, I wouldn't say I have a bearish take. We're long-term investors when it comes to this stuff. So it's less about predicting the number in 2025, and it's more about being right on the trend and sort of the order of magnitude of the trend. And when you talk about 1% of, money supply in the US, like that number's going up. If I can bet on one number going up, it's that number.
Yeah.
And I don't know if that's going to be a 2025 event or, a 2026 or 2028 event, but that number is going to go up and it's going to be very significant.
Mm-hmm. Right? Yeah. Okay. That makes sense. That's very fair. I just had to ask. I feel like
another non-answer answer, but
hey, you're the guest. You could answer however you like.
Timing these things is always tricky,
right?
And it never goes up and to the right. There's always, it tends to be cyclical in crypto. So we'll see how. I do think we are moving from a highly volatile 80 vol, 100 vol asset class. When you start to layer in things that are more secular and kind of growing the way I think stablecoins will grow, I do think you start to dilute some of that volatility, which I think is a positive thing for the industry. So I don't know that we're going to be in boom and bust crypto cycles forever. I do think as you bring more people into the market, utilizing stable assets and yielding assets and not speculating, that's undoubtedly a good thing for the industry.
Mm-hmm. Yeah. Numbers aside, you mentioned that like this is just a trend that you're seeing, this is a trend you definitely predict happening. What are other trends that maybe we haven't discussed already that you think are significant that we'll see pan out in 2025?
I think I'm hopeful that we'll see, businesses start to really adopt stablecoins. Everyone talks about people in emerging markets using,
like if I go buy a coffee.
Yeah, so I think we're
like
definitely
that's simple.
I think we're definitely going to see merchant acceptance of stablecoins. I think a lot of that is a function of getting stablecoin regulation, nailed down in the US. Amazon and Walmart and Starbucks, they're not accepting stablecoins unless the rules are very clear, right? They're not looking to take on any risk that's not needed, right? So if we see a stablecoin bill, I think that will really open the floodgates for merchant acceptance of stables. Still, going back to what you just said before, though, like if I'm a business in the US, I want to work in fiat. Like my accounting's done in fiat. I pay my taxes in fiat. It works pretty good, right? There's maybe some use cases that I'll start to experiment with, but if I'm a business, or even if I'm a consumer in the US, like what's the value prop for me to hold crypto assets, whether they're stablecoins or otherwise? I think we need to see some more experimentation there. The expansion internationally makes a lot of sense. I'm very curious to see what happens around business banking in the US, and if entrepreneurs can find some, attractive ways to build adoption in that space. That's a huge, that's a big market. That's a very big market. Getting banking corporates, expense management programs, like companies like Brex and others. Those are big fintech markets that are still very, very TradFi today.
So you don't get a paycheck in crypto?
I do not get a paycheck in crypto.
Would you like to? I don't think you would, based off of your answer.
It's I wouldn't mind getting it in stablecoins, especially. Okay. Well, here's like, I think one interesting thought experiment is like, we all have checking accounts and savings accounts and retirement accounts and brokerage accounts. Like our financial lives are so fragmented across, I probably have a dozen plus different accounts, right?
Yeah.
I have different wallets and Coinbase accounts, right? So our financial lives are very fragmented between stocks and taxable and non-taxable and, low yield, less low yield, but getting access to treasuries, the treasury rate in a risk-free way, that I can move around at the speed of currency is a very profound. That'd be a very profound shift in most people's financial lives. That would get me to do more and more in stables, and I think we're close to that, right? But again, the bar is very high in the U.S. because of the things I mentioned before. So we'll see how that translates in domestically next year.
Mm-hmm. When it comes to investing in founders, obviously you probably get a ton of decks sent to your inbox. People are coming up to you. What do you look for in a founder, and what are some novel ideas that you've seen recently where you're like, that's actually pretty cool, whether or not you did or didn't invest?
Clarity of thought is something that is, it's hard to pinpoint, but it's one of those things that you know when you see it, and you have to talk with hundreds or thousands of founders in a year to have the kind of judgment and sense for knowing when someone can see the future, that and they can communicate it in a way to you that that really sticks and resonates. I think founders need to be able to convince capital providers. They need to storytell in a way that convinces capital providers to give them money, and they also need to tell that story to other people to get them to join the cause and join their startup. So I think, focusing on a unique insight. Here's the unique insight. Here's why that's going to be a big idea. And here's why I, as a founder, am uniquely, gifted to attack that opportunity. That's ultimately what it comes down to. And the founders that can walk through that, it's one of those things it's simple but hard to do, right? And so we're looking for people who have tremendous ambition, who have a clarity of thought about a problem, and a unique insight on how to solve it, right? So we're seeing a lot of interesting things at the intersection of payments and AI, and agent to agent payments and new monetization schemes and things like that for AI models. Those are all interesting and kind of intellectually interesting to think about. We're still probably a little bit of ways away from all of that, but we are seeing a lot of pitches at that intersection, maybe unsurprisingly, that are at least captivating. Is
it overdone? Is there a sector or type of startup that you're like, please stop sending me this? I've seen 50 of these. No. And they're all like slightly similar.
No, not.
You're too nice.
No, it's.
I feel like there are certain things where I'm like, listen, I've seen it 50 times over. I get it. You know what I mean?
Yeah. I think AI kind of just gets a bad rap for all that, right? It's like you can kind of just throw the buzzword around and catch people's attention. So
that's not to say there isn't value in that. I'm not trying to say that, but I remember like last cycle, like the metaverse, everyone had something to do with the metaverse.
I'm a big proponent that I'm a big proponent of, it typically takes 2 cycles for things to it takes time to build stuff, right? Yeah. Like just because I have an idea in 2024, especially an idea that's pretty far out there and is reliant on a lot of other things to fall into place in order for this idea to be successful. Again, going back to like stable coins, right? It's not some novel concept that launched in 2023 or 2024. It's been around for a long time, but you're reliant on distribution and market structure and liquidity and things that just other components that Circle or Tether, individually were not maybe responsible for doing on their own. And so it just takes a while for the market to absorb these good ideas. And that typically means, that's why seed companies take, 10 plus years to pan out, right? If things are really successful. So I think it's hard for people to be patient in the crypto market, but we try to slow down and bet on the right trends.
Mm-hmm. Fair enough. Lastly, Mike, can you leave us with a piece of advice, something that you've learned from your time in the space?
Oh, wow. Yeah. Interesting. I mean, so for fundraiser for entrepreneurs who are fundraising, I think the market cycles also impact the business and impact your ability to fundraise at high prices or low prices, right? We've gone through different market cycles, and I think every, the hot narratives in the last cycle may not be the hot narratives now. I would say focus on, getting your company funded well, regardless of the cycles and where we're at, in terms of valuations. I think be mindful of the liquidity that could be coming into the market, right? With, IPOs and potential M&A activity happening. Not every company is going to be a multi-billion-dollar exit. So I think just kind of keeping the expectations in line with kind of where the long-term goal of the company, and keeping options open, whether it's raising new capital, whether that's some other exit. I think all of that kind of needs to all be taken into context as we head into next year.
Yeah, that's solid advice. All right. Mike, thank you for coming on, and Happy New Year.
Thank you. Happy New Year as you well.
Yeah.
Thanks.